So I also think it's important to understand how the profits and losses work for verticals, because this might look confusing to somebody that's never seen it before. You might say, Cal, I'm risking $265, but the most I can make is $235, which means looks like I can never make any money with this trade. But it's important to realize that verticals are not an either or scenario, it's a sliding scale. So what happens when we sell a call vertical? Remember, when we sell something, we collect a credit. So when we sell this thing, we collect $235 out the gate. Doesn't mean we're going to keep it, just means we collect it up front. Somewhere in this range is where this vertical will end up at expiration. So when I say it's a sliding scale, all I mean is we start at 235 profit, and when this trade is finished, we'll either be somewhere in this green area, which is profits, or somewhere in this red area, which will be losses, but the most we can ever lose is 265. So at expiration, somewhere in this whole range is where this trade ends up, and that decides on whether we have profits or losses. So it's not an either or, it's not either 235 win or 265 loss, it's somewhere on this sliding scale. And just like with any options, verticals have break-even prices as well, so it's entirely possible at the end of this trade that we neither make nor lose money because there is a break-even price. But once again, just important to understand, verticals are a sliding scale. Somewhere in this range of this difference between the strikes, remember, $500 total is always the size of the trade. So if you add up profits and losses, it always has to equal the difference in our strikes. And here you see that. And somewhere in this range, like I said, is where you're going to end up at the end of this trade, either profits or losses. But the most you can make is what you sell it for, and the most you can lose here is 265. That's the important part to understand when you're dealing with verticals.